Hello and welcome to Crux Investor. We caught up with Mark Selby today. It's the first anniversary of Canada Nickel. Been a great year for them. They're up 14 times today, have been as high as 19 times. And we talked to them about some of the decisions they've made along the way, some of the decisions they have not made along the way, and how that's going to impact their decision making going forward. If you want our thoughts and opinions on that rather interesting conversation, you can find that at cruxinvestor.com/club. We can also find detailed company reports and analysis, which are truly fascinating and insightful. We've got commentary from experts from around the world on a variety of commodities and companies. Some weekly shows on there, which I think you might find interesting. We've also got training courses to help you with the diligence process. We've got summaries of other interviews that we've done just to save you some time when we know you're all busy. And if you'd like to join a thriving community of investors sharing their thoughts and ideas with each other in a nice, friendly, civil environment, free from trolling and abuse, you might enjoy that. So go along to cruxinvestor.com/club. And we'd love your feedback too. So do give us a like, be appreciated. Leave your comments below. We'll get back to absolutely everyone. And if you want to see precisely what we talked about today with Mark, take a look at the description below. Mark Selby, how are you, sir?
Excellent.
Fantastic.
Big day today.
It is a big day, and that's why we're calling. Happy birthday, Mark.
Yes, it's our first one candle, birthday of Canada Nickel since we started trading publicly just over a year ago. So,
well, I wouldn't normally call companies when they've had an anniversary, but I think this is the exception to the rule because you've had quite a year of it, starting at 25 cents. I think you have been as high as $4. You're at about $3.50. I think your shareholders are quite pleased.
Yes. No. People who got in at the 25 cent round, including most of our management team, have been very, very happy with the performance to date. And again, like a lot of things, you have a great project if you get the timing right. And, the nickel market's been, the winds are blowing with us, quite nicely, and again, we set out a year ago to aggressively advance this project. And we've been, been able to, really drive this thing forward. And again, the great projects, are the ones that kind of, every time you step out, you generally get a positive surprise. Again, we'll have some disappointments along the way here, but so far we've been pretty lucky in terms of every major step that we make has really panned out.
Okay, I agree with you with regards to timing, and I think there's a few commodities where the timing is right and they've benefited from that. But you've also got to set the stall out properly, and that's really what I want out of this. I want to help our viewers try and understand the building blocks. As a CEO, you must put in place, because we always talk about business plans and strategies and assets, and you've got to deliver those things in the right order. Sometimes they don't necessarily happen sequentially, but you've got to mostly be in the right order. So I was hoping we could have a chat about if you can remember that far back.
Sure.
So last year. So let's start with that. So if you're happy to have that chat, I know because I kind of sprung this on you. Is like obviously you listed a year ago, but it started a bit earlier than that. So what was the idea when you started?
Yeah. So literally the week after I left RNC, I was approached by 3 private investors and said, "Hey, we've got this really interesting nickel discovery just north of Timmins. We think you'd be great to help advance it." And again, to be honest, I almost didn't take the meeting because, again, our team kept pretty good track about most nickel activity out there. And it was like, and you hear a lot of, "Oh, this is really great." And you go and look at it and it's not really great. But no, we took the meeting, met in a hotel north of Toronto. And yeah, they had hired a great geophysicist who realized that, Dumont and these types of deposits, which was my past life project, have a very unique geophysical footprint. We had this guy I didn't know, but we had hired him to do work at our West Raglan project that we had at RNC, and is very, very well regarded in the industry as a good geophysicist. And so sat down and they laid out sort of the results from 4 holes, and I went, "Hey, actually, you do have something here." So, it was the right size, the right sulfur to nickel ratio, which we talked about before. And it looked like it had the potential for a high grade core, which Dumont didn't have. And so, it's like, okay, yeah, let's go.
Okay. Sometimes it's the luck of the draw. So one, you may not take that phone call, and if you did, you may not have gone. And as it turns out, you kind of saw enough from 4 holes to go, well, maybe, which doesn't sound like a whole bunch of holes to me.
No, particularly in a massive deposit. It's again, it's still exploration, and those 4 holes might have just happened to hit the very best part of the deposit. But again, the thing that from my experience with Dumont is just, by the end of 10 years with that project, we really knew just how much information that early geophysics gave you. And so that's why, was able to sort of move so confidently into, okay, based on just 4 holes, into a very large target that, this was really, really worthwhile pursuing. So
right. Okay. So you're basically leveraging off what you'd learned at Dumont, allowed you to make a quicker decision than perhaps you would have otherwise. Okay. So that's great. But this is the bit that fascinates me, because you had to deal with 3 different entities. There were 3 different entities trying to come together as one. And I know what it's like trying to get 2 CEOs trying to agree with each other, let alone 3 sets of CEOs, let alone an exchange who is notoriously, let's call them fastidious. That's a polite word, right? That process must have been painful. Having been through it myself, I'm imagining it must have been difficult to come to some sort of agreement.
Yeah, because you had 2 separate public companies. You had Noble Mineral Exploration, you had another one, Spruce Ridge Resources, and then the 3 private investors who had approached me. And it was a joint venture of a joint venture where they were kind of partway through the process. So they hadn't really even completed any specific, or partway through some specific milestones. It took about 6 weeks after that. Yeah, let's do it. With the deal almost falling apart, sort of 2 or 3 times during that process, to be able to, by early September, kind of getting an outline in place in terms of, we've agreed the broad terms, at this point in time, and then we're able to move forward. Again, one of the things that we've tried to do wherever possible, again, what you know what you know now, and so you can always think that you're what's coming down the pipe for sure, but you really never do. And so, in September, nickel prices were $18,000 a ton. I knew they were going to, I was pretty confident they were going to fall back down. And we talked about that the very first time, we had a call, which was that September. And so, the window was open. So, we basically needed to get the project rolling, get some momentum for the project while people were still seemed to be keen and interested, in nickel at that time. So, we had an agreement in place, but we hadn't completely locked it down at this point in time. But it's like, okay, let's start drilling, because we know we need to start moving the ball forward while we get the rest of it in place. That was, that's one thing I think we've tried to do, all along is keep moving the ball down the field whenever you can, when the opportunity's there.
So do you think, because when you're in those situations and there's so much going on and you kind of get a little bit worn out, and do you think you could have done a better deal in hindsight across the board? Oh,
I mean, again, at the end of the day too, like to get, again, with my RNC days and now, one thing, have actually been able to get a bunch of deals done. And the key thing with getting them done is you just have to, and again, you've done a bunch of business deals, is you just, there's the price you'd like to pay and there's the price to get the deal done, and if you can wait another 6 weeks to, try and squeeze out, in this case, we probably paid, in terms of the new money coming in, probably paid, valued the asset. We had to pay probably a third more than what it was worth, at that point in time. But, at that point it was 6 versus 8, in what we saw as what I saw as $1 billion opportunity. So, that extra third, was hopefully, if everything worked out, was going to be a rounding error in where we were going. And again, the key thing was, let's not waste another month trying to squeeze out a better deal here. Let's just get this thing going.
Yeah, and obviously with hindsight, that's kind of all worked out. But does that give some indication about how you come to deal making in terms of it's better to get things moving than worry about, shaving costs around the edges?
Oh, for sure. Because again, a lot of time with deals, there's there's a certain momentum, and there's always things that you don't expect to bump into, that you have to work through. And if you don't, if those things pop up without any momentum in the deal, then it just stops, right? So, as much as possible, it's good to be able to keep that momentum going, to bump, to get over some of those, hurdle bumps. and be able to, to get there. I mean, the thing for us was, we could have waited till we had the deal totally, definitive agreement signed, right? And that probably would have been the end of September. And then we could have waited until we had some visibility from the exchange in terms of when we're going to list publicly. Because again, we raised a pile of money, and it was private. It's like we're gonna go public. We just don't know exactly when. And at that time, we thought we'd be public at the beginning of December. If we had waited until let's raise money once we're public. Well, it wasn't until the end of February, before we ended up going public. And because the exchanges, again, most TSX deals, fall into a couple of sort of clean buckets in terms of it's an RTO of a single asset. It's a spin out from an existing company of an asset, into a new company. There's sort of 2 or 3 buckets that cover off probably 90% of the transactions. We unfortunately were one of those 10% that weren't a standard transaction. And to complicate it further, you had 2 public companies, and 1 non-public entity, that was involved in this process, and, there are several different dimensions of it that made, the exchange, as we're trying to get this thing listed, their heads kind of explode, more than once. So, but again, because we had got going and we had that sort of whole, range of momentum behind us, we were able to work through it all. And we were able to still go public and still have a pile of momentum, that we're able to carry through, once we've gone public.
And because they're looking at you so intently at the beginning, does that mean they kind of keep their eye on you, or once it's dealt with, that you're sort of out of sight, out of mind? I mean, has that hindered your ability to do business now, or because of the success, they're going, do you know what, they're good?
No, I mean, again, at the to be honest, yeah, I mean, there's a huge amount of scrutiny as you first list, and there's, again, scrutiny as you get going. But then, as there's a relationship that builds, and sort of, okay, they're not trying to pull a fast one here. That there's a relationship builds, and things get easier as you move forward, and you establish a track record that your disclosure is consistent with with the rules and so forth. So.
Right. Okay. Now, you've gone through that sounds quite painful process, because it always takes longer than you think. You needed to have all the other variables in place. Just kind of regular, just setting up a business requires you to go and find a whole bunch of stuff. People. Yeah. You got the money nailed now, but you've got the asset, but you need the right people. So who on earth was going to be interested in a small startup nickel company in that environment?
Yeah, no, we were pretty fortunate. And again, that's part of the thing, when things are good, nickel, nickel has spent a lot of time when it's not good. And I spent a lot of time going through it. So, that's part of, again, trying to advance things, while things are, there's a light on your metal. So, yeah, no, we were in really good fortune that, again, these companies had been working in Timmins, and, Bill McRae is the guy on the ground there, who has got all the relationships locally in terms of drilling assays, in those local people. And again, was able to pull we had a very small couple person crew at the beginning, as we started drilling. And then Steve Balch, as I said, was a, great geophysicist and was our VP exploration. And then we brought Jesse on board to help out in terms of the business development and help get the various pieces of the business together. And then Stephanie came aboard in terms of, making sure everything got paid and cash came in and cash went out. So, you start to put those elements together. And again, the nice thing is, as you get more information about the deposit, you can say to people, okay, it's not just an idea. The first 4 holes all came back, as expected, right? And this thing is looking really big, and great. So then, I was able to go and start pulling people that I had worked with, who previously worked at RNC Minerals and had gone off to do different things, and start to pull them back in, and build the team out so that we could, advance this project, as much as possible, and got some great help, from a lot of the key people, Jana and Alger and Michelle, who were all involved with Dumont, who were able to provide us, some key help, at key milestones as we went along.
So one of the words I remember that you used used it a lot at the beginning, was we're going to do this in an accelerated time frame. We're going to, and believe you me, Mark, I hear that all the time. We say, oh, it's an accelerated time frame. We're going to deliver. We're going to skip a few stages and we'll get to where we need to be. How did you? Well, what did you think you had? What was the starting point for this accelerated plan? Because if you don't get the base right, you're going to fall over.
Yeah. So I think the first key step is, particularly for junior exploration companies, is we knew it was going to be big, and it was going to take a certain amount of drilling to do. And you only have so much cash. So there's the balance between what I call drilling for value and drilling because it's geologically interesting. If you let geologists just go off and do what geologists want to do, they'll do a lot more drilling that's, geologically interesting meters. But isn't necessarily going to help you build the value of the story at that point in time. So, we very carefully set out the drilling to, basically get the minimum we needed to be able to deliver the kind of resource, that we wanted, which was by the end of February. I mean, from first drilling to 12th largest nickel sulfide resource was 6 months, and on a $6.5 million budget, $2 million of which was involved in buying the asset to be able to take the royalty load on the property down to 2%. So, for $4.5 million from, what had really only had 4 holes in it, is a, tremendous opportunity. And again, the part I'm probably, we're getting pretty close here to getting a PEA done, again, in less than 2 years from, first drilling. Some companies can, and again, because I think people say, oh, some companies have done things a lot quicker, but sometimes, there's a lot of assets out there that have been maybe around the block 2 or 3 times, and so a new company's coming in, do a little bit of confirmatory drilling. There's 40,000 meters of historical drilling, and you can, or previous resource, and then it's relatively easy, to get a PEA done. But this is a brand new greenfield project. So, I'm really, really proud of the fact, that our team is going to be able to get this done, in well less than 2 years, from a standing start, in September 2019.
But you've got to get the balance right, haven't you, between appeasing the market and making the geologists happy. And we've talked multiple times in the past about companies that perhaps do headline drilling. And by that, I mean, they're looking for the headline of the news release. So they do small step outs. They drill where they know they're going to have success versus what's genuinely adding value to the asset, the ore body itself. So how do you strike that balance between doing it right, so I understand what you've got, with a limited budget, early days, where you can't afford to get things wrong, because that kind of defines you, right? You've got to be successful, but at the same time, with an accelerated timeline, you've got to understand the size of the opportunity in front of you. So how do you strike that balance?
Yeah, I think one is being really confident in terms of what you've got. So, because again, if you're not really confident about the size of the prize, what a lot of juniors will do, okay, we just raised money, we need to sort of pay our, generate enough news flow, pay ourselves for at least a couple of years out of this money raise. So we want to generate news, but not go too quickly, right? Just in case we, get to the end of it and we don't really have anything there. So one is, being really confident in terms of what you've got that's there. And then two, again, we had our first financial model for the deposit 6 weeks in, because again, there was enough information to start to scale it out. Again, there's lots of assumptions there. And again, because from our Dumont experience, we've got a pretty good grasp on what's there, but it's okay. This is likely how deep this ore body, we'll be able to mine this ore body. So let's not really drill much beyond this, because it's not going to, end up being part of that first mine plan. We poked 1 hole way down, and that was a promotional hole. But 2, we just wanted to understand, how deep this thing did go. 900 meters of continuous mineralization is pretty good. So we know it can go well below, the resource that we have, but the rest of it was like, okay, this is the cutoff, and that's as deep as we're going to drill, and we're not going to waste any meters below that side. Again, we were able to confirm pretty early on that the geophysics and the drilling boundary did line up pretty closely. So again, geological boundaries are something the geologists would love to drill, all day long. But okay, we've got enough information to confirm those boundaries, are where they are from the geophysics. Well, once we get to pre-feasibility, we do the next raise, then we'll spend more time, more clearly defining those geological boundaries. But in terms of getting the resource done, initial resource done, let's stay on the inside and keep those meters, focused on the highest part. And then, again, one thing, as I said, multiple times about this deposit is this higher grade core. It would be really easy for these structures to just drill lots of 0.2 and 0.25% nickel. But, at this point in time, that's not really going to add value. And what's going to build the plant, 0.3 to 0.35. So again, in terms of meters, let's focus as many meters as possible on best defining and expanding as much as possible that higher grade core. So, those were the things that really drove our thought process in terms of, getting the drilling going.
But what you've also described there to me is the things that you decided not to do, which is often as important as the things you decide to do, right? So there's the things which you then report on. But in the background, what we're probably not aware of as part of the thinking is you guys going, well, I'd love to do X, Y, and Z, but it just doesn't make sense now. So are those sort of difficult conversations internally, or is everyone tuned into accelerated time frame?
No, I mean, I think our team is all pretty tuned into accelerated, but again, there were some pretty healthy debates around some of those things, because again, it's the step, how do you know, again, in a lot of technical fields, people, by definition, like to have more data than less data. So, it's the being able to make the call that, this is good enough. And our team, had some pretty hard conversations a few times, but again, as we were able to, get comfortable that we were making the right calls, that good enough had worked out, enough times, then we were able to, to move forward. And then those discussions become a lot easier the next time we have to make one.
So do you think that you've done anything differently from other junior miners, or is this down to luck? Is it down to timing? What have you been in control of that you think, do you know what? We've done this the right way. We've done it. We've been different. We've been aggressive. We're going after this aggressive timeline, but we've thought about it the right way. You saying that, I'm really pleased about that process.
Oh no, I think, if you look at other companies, there's companies in the nickel space in the last 5 years who've raised double or triple the amount of money that we have, and may have put out one resource update or no resource, not even a resource at this point. So, the fact that we took, basically, we've raised a total of about 25 million Canadian. We still have a third of that in the bank. And so with, just over $16 million, we've delivered, what is the 8th largest resource in the world already. And we're, coming very close to the initial PEA and a feasibility study, by the end of this year. So, I think we're, if you look at the pace of other sulfide discoveries, we've been able to move very quickly. And again, one of the benefits of these large low-grade deposits is, again, it allows you to be productive. That's why I get excited about them is when you've got a narrower high-grade vein, yes, you get sexy core that, gets everybody excited. But when we drill a 500 meter hole, as I've said before, we get 460 meters of assays once it's through the soil for the most part. A lot of people are drilling 500 meter holes to hit a high grade vein that's 400 meters deep, and they get 10 meters of assays out of a 500 meter hole. So, it costs a lot more money to be able to define an equivalent amount of nickel tons. So, these deposits allow you to be productive, and we've tried to be as productive as possible with the dollars that we've got.
Okay. Yeah, and I think people are trying. Well, I mean, you didn't tip your hat towards the fact that the price has gone through the roof, and you didn't sort of tip your hat towards the fact that the battery thematic is really catching on fire. Well, I better not use that phrase. People are very interested in the non-flammable battery thematic.
Yes.
At the moment.
Yes. Oh no, I mean, and that's the part that's, again, we've been really lucky that, the market, has completely moved our way during the 16-month time frame. So, that's helped. And that's something you always have to keep in mind is again, we started out, it's like, okay, we need to move aggressively while the light is shining on nickel, because, you just never know when it might turn into a down period for, 12 months. We got lucky with COVID, looked, pretty menacing there. But, the material sector is one sector that's, after a very short, sharp downturn, it's rebounded, very quickly. And again, with copper above $4 and, nickel almost $9 a pound, it's been a good place to be. And so, that's, where we've got to has turned out to be the right decision. If things hadn't, if things completely went off a cliff in the other direction, let's say, we went into a massive recession and central banks hadn't, turned on the floodgates and China didn't turn to stimulus to be able to do it. Yeah, then we would have had to make a decision to say, okay, the market's not there. It doesn't make, how much does it make sense to spend capital right now until, we've got some visibility in terms of when the market's going to come back. But, fortunately, we didn't have to make that call.
Did it appreciate that? You have to keep motoring. As the question is, how quickly do you get motoring? And and it's quite clear what your decision was. But with regards, did it cost you anything more? Did it take more time than it could? Would you be further ahead today?
Oh, we would have. I mean, I think the two things that probably impacted us the most was more of the biggest one was actually the regulatory delay in terms of getting listed. Because we had expected to be listed in December. We had laid out a whole series of new, of work that would generate good news flow post that listing. And we were expecting, probably to raise money in February after 2 or 3 months of good news flow, and a resource, on the horizon. In that case, all that news we had to, we went public, and the next day we put out a resource and a whole pile of 2 months worth of news flow. And then it was a week later, that COVID hit. And 2 weeks later, most of the world had shut down. So, so not again having that momentum in the public share price. We had the momentum in the project, but we didn't have any of that public momentum. And we came out of the gate and went sideways for a little bit. But again, with help from that time, PI and Haywood and some support from the existing shareholders, we were able to raise the next tranche of money to be able to keep moving the project forward. And then we came back, the market came back pretty quickly. We were able to move forward. But that loss of 3 months worth of momentum sort of probably we ended up having to do a capital raise at probably half the price that we were expecting to be able to do that capital raise if back in September.
Right. Okay.
Yeah.
So there's my headline. You've written my headline for me. TSX more costly than COVID. Got it. Okay. Thank you for that. We I
didn't say that.
I know. I did. Just in terms of, obviously, it was a very sort of difficult time for lots of people, but in the industry, as you say, there was a real momentum in the commodity space, especially with battery metals. But nevertheless, you're still having to deal with sort of things changing on a daily basis. It wasn't all positive during that period. So how do you kind of keep the course? Would you feel that you had to be a bit more agile in that and adapt to certain situations?
Oh, again, in that capital raise, it was again, we had expected, in September, January, February, we were doing this capital raise after 2 months of great news flow. And, we would be doing the next raise at probably, triple or quadruple the price that we initially went public at, or we did the initial private financing at. But again, the market is where it is. you need the money to be able to keep moving forward. And, so you end up issuing more shares than you'd like, but that's what you need to keep, to raise the capital and keep the project moving. And again, as the year went on, the EV thematic, and sort of that midterm nickel story was, becoming more, clearer and clearer in focus. So, it did make sense to keep pushing as hard as possible, because the size of the prize is, getting a project ready for what we think is going to be a nickel super cycle, again, coming in the middle part of this decade. So, so it was worth probably a little extra dilution to get the money to keep the project momentum going at that point in time.
I mean, this is a sort of awkward one in the sense that you were RNC. It was a different marketplace back then, right? And you had a lot of retail investors with a view as to how you should run a company. And then you've got this environment, which is a much more positive environment in terms of, for obviously battery metals specifically, and it's fairly young. And there weren't too many retail in the story initially. They're very different environments for you. Does that make your life a lot easier? So, when you're winning, everyone wants to follow you. You want to be associated with winners, right? So I think you can probably put yourself in that camp now. The conversations that you're having now with retail are different. Does that take a bit of pressure off you? Do you feel that you're able to make better decisions or able to just get on and do your job? Because we see this with a lot of companies where perhaps things aren't going quite as well as the some investors hope, and there's a lot of pressure. It's a heck of a lot of pressure. I mean, how do you kind of look back and look forward?
Yeah, so I think one of the benefits of moving aggressively, is again, stuff happens, and so sometimes things might take. Again, we haven't hit, bluntly speaking, we haven't hit all our milestones as we've gone along. Stuff has taken a couple months longer than we've expected at various points. But again, relative to sort of an average benchmark, that's still several months earlier than where most companies get to. So again, if you push aggressively, you give yourself some cushion for those oops, that happen along the way, as opposed to, if you're sort of going along typically and you're a few months late, then, you can, draw. It's a lot more easier to be more aggressively criticized that things are taking, quote, way longer than they're supposed to be. So, I think, that, in terms of our aggressive timeline has been helpful. I think too, you just have to, again, we will hit stumbles at some point. You never know where they're going to come from. But I think the other part is, we've tried to be as transparent as possible in terms of, as many milestones as possible. Again, it would be easy for me to not talk about, feasibility study by year end. And, it'll happen when it happens. But again, I think, keeping those lines of communication open as much as possible so that you don't surprise people, is also very helpful. So, so those two things have helped, build up some goodwill. As I said, we'll probably hit some stumbles, along the way that we may have to make some withdrawals from the Goodwill Bank, but we'll, try and make as many deposits as possible there as we move forward.
Right. Okay. I kind of sort of see some CEOs really struggle. I'm not saying you are. I'm just saying when I interview, and I've interviewed quite a few now, you see them struggling at moments because they're trying to please everyone all of the time, as opposed to having the confidence in their own ability to move forward. And I think it is I wouldn't be a CEO for love nor money of a mining company because it's extraordinarily tough when you've got thousands of people who can do the job better than you.
Oh no. I mean the experience with RNC. I mean, to be honest, when we made the Father's Day fame discovery, and we had that. We had massive number of retail investors, come to the fore there, and again, there is no shortage of opinions that were shared, on a daily basis. In terms of what we should or shouldn't be doing. And, again, I think having that experience of, okay, there are zero answers that will please everybody. So you just have to make what you think is the best decision at that time with the information that you have and move forward. So,
okay. Well, like I say, been a great year. great 12 months, should I say. It's been a great 12 months. You've obviously made a lot of the right decisions and put the right moving parts in place to enable you to do that. You got to keep going though. Okay.
Yep.
Mark, you may be 14 to 18 times up on your share price, but you got to keep going. You got to keep going, right?
Yeah.
So 2021, it started. Next up is things like PEA. You've got a feasibility study, but then you've set yourself some pretty tough goals. So are you going to be able to deliver on those? Have you reassessed as a result of COVID still being around?
Yeah, no, I mean, COVID obviously slows things down, but no, I think, we're largely on track to be able to meet those goals. And so, the key thing here is, we're going to unlock, a huge amount of value at Copper. Again, we could have waited to do the PEA until the resource was twice as large. We already had 900 million tons of resource to get going with. So, you can start to put very large mills around even just that scale resource. Again, the numbers will get even better, because I expect a very substantial increase in that resource given the drilling we've been doing since the last resource came out. When we go to the feasibility study. So, we'll have a lot of de-risking around the project itself. We've got the 5 option properties that we've talked about, that the geophysics worked out great. We had the news release a few weeks ago on McDermott, that looks like a really, really good target. So, again, my goal is, how do I take this up? I don't know if we can do another 14x from here, but, to get another 3 to 4x from here. And again, it's unlocking that exploration potential in a way, that makes sense for shareholders. It's corporate initiatives like, being able to have discussions with Glencore, and engage in a very constructive way, given past relationships, that again will add a huge amount of value to the project because we can get going for closer to $100 million than, the $1 billion price tag that most projects, of this size have. So, by pushing on those multiple fronts, I'm, hoping to see another, something X increase in the share price as the year goes on, particularly if nickel, the winds keep blowing in the right direction. And again, one of the things that makes it easy to make the right decisions is, when CEOs and when management teams have a large amount of equity in the company. We just announced, we had our equity plans, they're all priced at $3.60 a share. And so again, we intend to be able to make a lot of money on the options and RSUs that we got at 360 because, we still see, a huge amount of value to go here. And again, it's easy, much easier to make decisions that make more, again, you can't please every single shareholder, but it's easier to, please the majority of shareholders if your interests are as closely aligned as possible with them. And that's what we've tried to do with our team. And again, I think something that's much different than a lot of other, junior mining companies.
So you think for the PEA, because that's due quite soon. Have you done as much work as you need to on that? Do you is it just polishing again, or are you looking? Because every day brings up new information, right? So things change, and I know we've talked in the past with regards to the Glencore deal that kind of delayed things, but for all the right reasons. It's a significant opportunity for you guys. Are you seeing new data each day, which perhaps pushing things out, going to delay things, or are you still aiming for that? Delivery?
We're pushing as hard as we can, but at the same time, and again, once we publish a set of numbers, you kind of have to live with those numbers, until you publish the next set of numbers, which are not going to come for at least another, 9 months or so afterwards. So, and the thing is, when you have a billion tons of material that you're going to, 15 cents is $100 million of value. So, again, we can, sweat, we're not going to sweat the pennies at this point because, again, there's still a bunch of upside. But, if something came up that was, 50 cents or $1 worth of value, that, or 5 or 10% more throughput or something like that, those are the kind of things that, you'd like, okay, maybe we'll wait a little longer and make sure we get those incorporated into the, into the PEA before we come forth with the numbers.
Right. Okay. But you use up a few of those brownie points that you've earned across the year, I suspect. Well, look, Mark, I'm really excited for what you guys are going to do this year because it's been a nice for us. We keep coming back and having these conversations. It's been an amazing case study of how it can work if you lay it out right, if you get all the moving parts. I mean, I will say, obviously the market's definitely worked in your favor for sure, but there's a whole bunch of stuff that if you don't do it right, it doesn't matter what the market's doing, you're going to fall over. So, and I appreciate your time consistently and also helping us understand the nickel market, because it's an interesting place. Fascinating.
Yeah.
Okay.
Oh no, nickel as a commodity is something, again, educating investors about nickel who are way more familiar with copper, silver, and gold has been a key piece of this. So no, thanks for your help with that as well.
Appreciate it, Mark. Okay, well, happy birthday. Is there a cake? I should have got a cake. Where's my cake?
I'm gluten free, so I don't. I'm trying to be a little far too. So yeah.
Okay. Well, yeah.
Got some coconut ice cream. There you go.
Coconut ice cream with a candle in it. Okay, well, Mark, enjoy the rest of the day. We'll catch up with you soon, I hope. And congratulations.
All right. Thanks, Matthew. Take care.